So normally I don't speak and I just let Vols, kind of help everyone the best way that he can. I would like to point out a few things. Vols started as a trader in the pit in Chicago. He beat up people. He won't talk about it because he's not a dry snitch, but I'll talk about it because I'll send my attorneys. He'll be fine. He worked his way into a principal position, which means he was a partner at a flagged institution, managing more money than any of us will ever see, including me. Like, he literally managed more money than I will ever have, probably. He has done his level-headed best to add value to regular people. His goal is to help people. He retired before he was 40, way before he was 40, actually. Well, 38. Some of you are young, but he lives on an island. I'm not going to say where. He lives very well. His wife made him do this, which I absolutely agree with her, by the way, that he should be teaching. He should be engaging. He should have the social aspect of helping others because he loves the game. Vols is Michael Jordan. He doesn't play the game because he needs the money. He plays the game because he loves it. He actually loves it. So without further ado, I will give you Vols.
Hey, you're flattering me, obviously, but I would say that you got a lot of things right there. Mostly,
I am not flattering you. I'm telling the truth, bro. I'm telling family secrets right now in public. I don't care, bro. I don't care. Let them try to come get you in South Florida. I double dog dare them.
No, I mean, I would say that I started this when I was young, and it was all I cared about, right? Just like anybody else, when you dive into something, you get good at it, and it was all I wanted. I didn't know what I wanted to do. I thought I'd want to be like a marine biologist, to be a stockbroker, eventually to make money. And then when I learned what stockbrokers actually do, and how difficult that path is sometimes, I kind of put a hold on that and found my way into market making through a friend who had a brother in market making. And basically, he told me that his brother, this guy was cocky, by the way, he would tell me that his brother made basically 5 times what I was hoping to make out of college and played games all day effectively. And so as soon as I heard that, I kind of went all in. I spent my last semester at college just in the finance library, reading every single book on options, and there were not as many good ones as there are today, just so I could get all the theory down to get in the door. So then I got hired in my first interview and just kind of went, pedal to the metal, just dug in entirely from not just theory, but also kind of like treating everybody as an apprentice, going, full bore into the training program. And it paid off, just like anything else. What I would say now is, like, you guys have the opportunity to do this kind of stuff without that kind of path, right? Like, there's so much available. Spaces like this, no pun intended, obviously, but social media is just an incredible opportunity to connect with people and learn whatever you want to know in spaces where it's not typically available. Like 10 years ago, you wouldn't be able to find information on the stuff that you can find at your fingertips anytime today. So that said, a little bit about my path. I was always an SPX market maker. When you guys see Jem Carson on TV, that's essentially the same job that I spent my entire career doing. So everything he talks about is stuff that I know innately. And it just scratches the surface. There's so much complexity out there besides Gex, Gamma, Charm, whatever. And it's really, really influential, more so than ever before. When I started my career, I loved the poker playing aspect to it. I'm sure a lot of guys who are kind of, of my age or a little bit older totally agree with me here. Sometime around the 20 teens and, of course, like into 2020, it's just been this kind of arc towards making everything more systematic, everything kind of controlled by computers and models, very fast, very efficient. In some ways, it doesn't always make sense, but it's kind of necessary. They started competing along these vectors of speed, and when you do that, it makes things less discretionary. You can't really respond on the fly as much, and it became more of a grind in some ways. And really, there's a lot of money in market making. Don't get me wrong, or there certainly can be. there's so much volume. And now that there's all this 0-day flow, there's a ton of volume if you do it correctly, but it's mostly a job for the computers. I got to a point where it was clear that you could actually make more money if you understood the influences by trading against this stuff, so to speak. That's not to say I wanted to trade against my firm or any other firm in particular. It was that the influences were so clear that it was just so compelling, right? And it's what you guys don't understand. Everybody likes to talk about market makers as being manipulative or kind of gaming retail flow or whatever it might be. And sure, there's some truth to that, but it's idiosyncratic and it's one-off. It's not the type of thing that can happen in a listed space that's so competitive like the SPX. Excuse me. Sometimes there are commodities, or I'm sure there are corners of the market that are more subject to this. But when you have so many well-capitalized players, it's just difficult to do the things that people claim are being done. It's not easy because when you do that kind of stuff, you must imagine you put yourself at more risk. And so anybody else who's well-capitalized.
So for clarity, Vols, like you as a market maker, were not targeting me, Ivan, Sells, or Hyper, or like anyone else. Like it was definitely algos or programmed to look for depth in a futures market or something like that, where there's icebergs, for lack of a better way to describe it. It was never Vols like in Chicago was like, here, let me steal from the poor people. It was never that, right?
I mean, we tried to steal from the other rich people, obviously. But like the gaming that you talk about as being subject to like people hunting your liquidity. And, I made a joke the other day, someone was talking about 2-lot stops. I'm like, yeah, that doesn't exist. Nobody cares. And in fact, when it comes to customers, the reality is any market maker would tell you, you don't want customers to blow out. Like everybody seems to get heated and they love the drama of when like a customer is on the brink. I've been there myself. But the reality is like no casino would be rooting against their players, right? You want everybody to be making money, everybody to be having a good time and thinking that they have a future in the space. So you wouldn't want to ruin your bread and butter. But that myth kind of persists, right?
But it's not market makers, right? It's not you. It's not other people in the space. It's not. I'll pick on Benjamin and Chris, right? Like I'll pick on people that are here that everybody can listen to or like look at their tweets. Like those guys are still making markets. You're retired before you were 40. Thank you, successful person.
I mean, I don't call this retired. I'm working harder than ever, but it's more fun now for me, right? Like this is actually like a passion project more so than anything else.
Are you gonna teach at community college and help the poor people, Volt? That's what I want to know.
If I live on an island, I think I'm the only market maker within like probably 100 miles. There might be some aspiring traders, obviously, but it's not nowhere I could teach this stuff. But Twitter and all this stuff, social media allows this, and that's the whole point of all this stuff, right? Like a lot of you guys, I can recognize the names. You're in the Discord for a long time or in the mentorship. Like,
but you're trying to help people. You are literally trying to help people day in and day out, help educate them, help them be more successful. You give away, like, I understand, you still hold licenses, even though you're out from underneath your non-compete, or your legal obligations. We'll call it that, but you absolutely do try to help people through memes. And and you go way further than that, by the way, and I appreciate it very, very much. And everybody here listening should also, there's a lot of furus or whatever you kids call them nowadays, because I'm the old guy, macro guy. Everybody laughs at me. That's fine. But like Vols goes out of his way to provide real information daily to people for free, for fucking free. Like, I mean, what do you want the guy to do? Come to your house and push the buttons for you?
The best stuff is paid, obviously, as it should be. But the point is, like, there was so much misinformation about this entire space when I started looking, and I'll talk a little bit about, obviously the teaser here, when flows outsize markets, like there's an incredible kind of arc that brought me to even care about this stuff. And obviously COVID and the way the industry changed after COVID brought me to do this kind of an independent thing where there wasn't really a niche like this before this, I feel like. But the point is, like, there was so much bad information, and it doesn't always happen disingenuously. I think it took me a while to realize that, because there's a lot of people that do just run away with stuff, and whatever sells, they'll just keep pounding the table on, right? Like I have some personal favorites. You guys have seen me call them out all the time. I don't want to, dunk or like call out bad services or whatever. That's not really the point. But It's that misinformation idea that you take away something from something that somebody's telling you, and they're positioning themselves as an expert in the space. But the reality is, like, the stuff you're looking at is just nonsense. It doesn't mean what you think it means, and so people get all hyped up. And when COVID happened,
No, time out. I can post 3 different charts from the exact same day at the exact same time. I'm not going to tell you that Vols was right, but I'm going to tell you Vols was right, and the rest were not.
Well, the tough thing is when I do that kind of stuff, like I still have people asking me to call the top because I had that like infamous now stop tweet when the market topped in February that everybody's like, do it again. I'm like, no, it's not the point of what I'm trying to do.
You've said stop so many times that you've been right, even though you tell people like, that was lucky and, it was kind of a pen and, I was just in the neighborhood. Like, but you've been right so many times that people have to pay attention. And I have to make fun of you about it because you make fun of yourself about it. Like your humility is excellent.
I mean, you can't do this stuff for a long time without like a good sense of humor and a little bit of self-deprecation because it's ridiculous how much people put pressure on themselves to be right all the time. You'll never be right all the time. And actually, you'll always be stressed if you're trying to nail exact tops and bottoms. Like, it's just kind of a fruitless endeavor, right? Like, who cares if I said stop on Friday trading 59.58? It doesn't matter. If we're going to move lower, you can get in now. And it depends on the structure you choose. There's a lot of things you can do to capitalize off the move. Oftentimes, if you just call the exact top, like, what matters next is how you trade and evolve your strategy and take profit. But going back to the whole point of this, like, it became so clear, especially after COVID. Like when I started my career, it was hilarious. I would have people all the time call me at the worst times, like cousins, third aunt once removed or whatever. And they would ask me, like, is now the time to dump my 401k at the exact bottom, like after we already sold off like 25%? And it became clear that so many people are misguided. And then you go to Twitter. At the time, it was like Reddit was probably more popular than Twitter for this kind of stuff. And people are just going all in on the most ridiculous takes. And there were some pretty tragic stories, obviously, when people didn't understand the stuff they were trading. And I couldn't keep my mouth shut. I mean, even in 2018, I'll tell the story at the end of this. I got in a little bit of hot water when I was still on a seat. I did everything I could to be compliant. Like, literally, I actually formed a compliance policy at my firm because we didn't have one for social media. And I went out of the way to have like our compliance vet it and all this stuff, just so I could speak anonymously and talk about what I was seeing every day because it was so damn interesting. And this is not a knock. I had some really great colleagues, and this is not a knock to any of the ones that I would not lump in that bucket. But I had some who just didn't care about what was in front of their face. Like, a lot of guys, you don't realize, like, you guys are initiated. You guys have a great opportunity to kind of like excel here and learn so much that you don't even realize, like, they're professionals that don't know the stuff that I'm telling you guys for free just because they don't have the same initiative to learn it. For a lot of guys, it's just like punching a clock. And I'm sure a lot of you guys feel that way about maybe your own job and like trading as a hobby.
I'm going to explain to them as a person who built systems for your firm, how you were so singularly focused on, your system that you didn't really have outside influence or information that could have moved you one way or the other. I mean, you've spoke about it before, but I really think it's important people understand that, Vols is not trying to get your money as a market maker, and that the systems you designed were so specific to yours, your specialty, that you just really didn't, you had blinders on. Does that make sense?
Yeah, I mean, it's a very narrowly focused job. And I think a lot of people rightly point out that it's difficult. I think, who's the other kind of prominent market maker in the space? God, I can't think of his name. Juan Sinclair, I think he talks about this. And he kind of asserts that, like, you can't take anything from market making and make use of it in your own trading. And I don't think that's true. I think the stuff that he's written lately kind of maybe shows that he's wavering on that hypothesis. But, the point is, it is very different. Like, when you're talking about scaling and harvesting a little bit of premium out of skew on an institutional portfolio, that's very different than, like, what can I do in my Ameritrade account to make money tomorrow, right? It just doesn't track. So I struggled with that too for a long time, where I kind of did that kind of stuff and realized, wait a minute, I'm looking at this all wrong. It was really 2018 that really roped me into this idea that the real edge here, like, if there's juice in the space, it's not about taking market making principles and using them in your trades. Although, in the mentorship, I talk about that kind of stuff because there is advantage to understanding how structures behave against different market environments. But the real juice is understanding that this market is so big. Obviously, the point of my little space here is when flows outsize markets, that does happen. And I think Jem made a comment recently, or semi-recently, that like options are the new underlying. And while that kind of got roundly mocked a little bit, because of course you need an underlying, you can't just have options on totally usurp the space. But there's a real problem there, but it's an opportunity as well. So like when options get so big, you have to think of it too. Like there's a little bit of liquidity moving away from the underlying itself and into these instruments, but these instruments need to be hedged. I don't mean to keep bringing up Jem, but he's kind of like the institutional version of what I'm doing for you guys in the retail space. We're trying to do, and push harder and harder through this space. Is he also kind of maybe accidentally circulated something that was maybe not exactly true, like the idea that 0-day options are not hedged with futures? Well, they clearly are, right? We see this every single day. For some people, 0-day are a proxy for futures for the customer side, but for the market makers, we have to hedge this stuff. It's just not really. The business wouldn't work unless you hedge very tightly, right? And with these things that expire,
Vols, for clarity, if
yeah.
if a regular market is 100 trillion, call it globally, then the options market is what, 10x that easily?
Oh, dude, that's a good question, but it's
No,
almost like,
it's in the ballpark. I know that number. So I when you say that options absolutely matter, it's 10x whatever underlying you're looking at. Like as a round number. I mean, that might be 8x or 7x versus 12x, kind of call it blended 10. Like you're not like the options market is that important. People don't understand that, well, I bought NVIDIA and NVIDIA is important. It's 3 trillion. Well, yeah, well, there's 30 trillion laying out there, and options around it.
you got to
Kind
be
of
careful
vibe.
with the notional stuff. I always laughed. And like, honestly, you guys, what I always want to kind of bring back home is like, this whole thing is, I don't want to say house of cards, but not everything makes strict sense. Like the clearing rules, all this stuff, sometimes they're pretty silly. One thing that gets bandied about all the time that is not exactly a healthy way of looking at it is the notional stuff. I make fun of that sometimes. Like you can't just take an option and liken it to the underlying as a notional. That's always going to over exaggerate stuff. But in general, like you can see even just the liquidity. Futures liquidity book depth is nothing like it was in 2017. And options just keep exploding. They keep growing and growing and growing. Now, some of that is like internalization. Some of these bigger firms like Citadel or Jane Street, they have ways of doing things that keep a lot of volume off exchange and, in places we can't really see and observe. No real problem there for us, I don't think, because at the end of the day, something has to be mapped to a hedge asset. And if someone's taking on flow when they don't have a view, they're going to hedge it away in a listed market anyways. So we're going to see the impact. But the fact is, these positions need to be hedged, and the assets that they're hedged with, like futures right now, I'm watching futures tick, trading 59.13 equivalent SPX. Like the liquidity in these hedge assets is not what it used to be. And it's kind of like this ghost liquidity when you think about it. When you look back to August, how could positions create such a chasm in August, right? It's liquidity. And as the option space grows, the influence actually grows with it. And market makers are making money hand over fist. I don't see who's going to care to stop this or who's going to do anything structurally that'll change this edge. And I used to get asked all the time, well, if you talk about this and we trade this, won't the edge disappear? Well, no. For one, it's not like we're concentrating our positions or our trades. Just because people understand it does not mean that the edge will disappear. In fact, this is good for the SIBO. The more people that observe this, trade it, and get involved, the better it is. And this is a huge opportunity right now to do things that were not knowable
Quick
before.
question, Bowles.
Yeah,
So
go for it.
I can buy longs right now before I can buy shorts right now, right?
What are you talking about?
In futures, I right now I just looked at a screen. I can buy a lot of futures, but I can't buy a lot of shorts, can I?
You mean sell a lot of futures?
Yeah, you know what I mean. Yeah, like
Yeah.
I can be long, but I can't be short right now, right? You know what I mean? More easily, like in depth.
Oh yeah. Sure. I see what you mean. Yeah, but obviously, this is still an illiquid moment and whatever. And I don't want to get too much into what's happening with futures right now. We'll see what happens when
No,
UK Europe
I
opens.
was just having some fun, bro. Just having a little fun.
Are you
You know,
telling me you're going long right now?
definitely
Are you
not.
buying this micro dip?
Definitely not, bro.
Yeah, but so like in my career, I started on the trading floor, and I think that was an excellent experience. I didn't expect to do that. I was quiet, kind of reserved. Even like now, my wife makes fun of me because I call myself shy, and she's like, "How can you say you're shy? Like you can talk for hours." Well, I can when I care about something.
You rock, bro. You're a rock star.
I guess I'm like maybe a little bit autistic. I don't know. But when I went to the floor, that was like that was like sports, right? It's like almost like competing, very competitive, very aggressive with like high stakes. I got to see early on some big moments where like it was clear that flows were exploiting the stuff that we talk about now. Back then, like in 2012, 2013, you had less ability to do that because gamma was like a weekly construct. You didn't have daily options. But you did see some players that would come in the overnight and just buy massive weekly call and put flies. And the only explanation for them was like they're trying to exploit the market mechanics in their favor. And I saw these things work like crazy for like time and time again. We'd gap through these positions overnight that we had sold ourselves, right? And some customers making money hand over fist because the market stops dead on a dime in the middle of some like weekly fly. Well, that's gamma. And like we would sit there and just bleed out on these positions and look around at each other. And there's like, I don't know, 30, 40 different firms, a bunch of independent traders on the CBOE floor. And it was just baffling. Like, how are we all losing money? Well, we're doing the stuff that's causing the market to stick. Like we have this position that we need to hedge. It was like this aha moment where it's like, oh, okay, so we gap through negative gamma because our systems are all doing the same thing, chasing each other to hedge. And then we get stuck intraday the entire time, just, settle this thing, max value for the customer. Another misconception. The reality is our hedging flows usually work for the customer, not the market maker. And it was us. We'd look around complaining about it, but at the end of the day, it's all us. You can't collude. There's too
Well,
many
but
people.
Vols, you said something to me on the phone, like in private, and you're like, you're basically a perma bull, and that doesn't mean like he doesn't go short. Believe me, people, he makes money, a lot of money. He retired before he was 40, but like, markets are
So
designed,
far,
but
so
the
tired.
point I'm trying to make is the markets are designed to go up, right? And if
I mean, this is a Mike Green conversation for sure, but that's something that people fight. Like it shouldn't be fought. It's like fighting the sun rising. It's weird to me to see all these people get super bearish and just hold on to this bearish view. Meanwhile, they're like pitching money into 401ks that their employer matches every 2 weeks. Like, what are you doing? Why would you do that?
Force placement of funds is one thing, but Vols, you have made money up and down and stayed balanced while you were doing it successfully enough so you could retire before you were 40. So you could go with the kids and play, I don't know, games and buy boats and on your island, right?
Yeah, we still got to get on your boat, by the way.
I'm going to pick out your boat, bro. We're getting there.
We'll get there. My son is just eagerly waiting. Every time he sees a boat, he's like, when?
You tell him Uncle JJ is going to pick out the boat. We're going to Cuba. We're going to get good Cuban coffee in Cuba. We do
My
legal
wife
shit.
is listening, by the way.
Hi,
But yeah,
Mama.
no,
Love you, Mama.
I think she agrees, anyways. But so this was a thing that was kind of like maybe I shelved a little bit, this idea that liquidity moves markets, and then when I saw it, it's kind of hung in the back of my mind. Really, when I went upstairs. So if you guys are familiar with the space, you can be a market maker on the floor, and then you can be upstairs. And for Chicago prop firms, what upstairs means is you're like up in the office and you're managing the position, right? You're not really just taking flow anymore. You are, you're the guy who's like talking to the brokers, and you have to give them good insight and all this good stuff. But you're also there to initiate things and track things. And
But
when I
no.
started doing this,
Time out. You built computer systems.
no, I did not
F-18s.
build computer
Well,
systems.
you didn't build them.
I oversaw teams that did this
Oversaw
stuff.
them. Whatever you want to, however you want
I
to
had to
say
be
it.
the direct. I had to be the director to
You
make it all make
you
sense, right?
you
Because a lot of tech guys don't have any clue why
you
something would be a certain thing.
you controlled the systems that were installed in your trading floor in your offices. You were the architect of what the quants and the tech guys were doing. Correct or incorrect? Yes or no?
Yeah, I mean, to some
You're a
degree,
hostile witness. Yes or no?
yes. At some time,
Yes,
for
he
some
did.
points, I
Yeah.
was right.
Okay. Well,
Yes,
let's get back to the conversation then. You heard what I just said, people.
but I don't want to go into details about like specifics with a firm or anything. That's not out of the range a little bit. But I always liked teaching, and I liked actually when I started at my firm, one of the reasons I was made partner was because I had built the training program, and so like we had you had people come in that we had to allocate. We basically assigned like everyone coming in, we have to write off like 500 grand or 600 grand as a training expense. When you do that, you have to know like you have to get them over the finish line no matter which way they think, whether they're quantitative first or systems first or calculus first, or just like, they're football players that don't know math. Like you have to make it make sense for everybody. And so I became good at kind of integrating the systems and the math. And for that reason, I was always more of like it put me in a good position to be a leader and a manager and make things make sense.
Big brain stuff.
Yeah, I mean, it's important to make sense. You get so narrowly focused in your lane, and you forget sometimes to zoom out and synthesize it all and make it make sense. And I think that's kind of what we're doing here with VolSignals too. It's like the whole point is there's so much going on.
How
If you get
young were you when
focused,
you got your first Porsche Turbo? What year was that?
that's,
What year was when you got your first Porsche Turbo? Not a regular Porsche, a turbo one. Which one? What year was that? Was
it was
it
early.
was 90s?
No, I'm not that old, dude.
Oh, pick on the old guy. Nice, bro. Nice, bro.
I wasn't even driving a car in the 90s, dude.
Dude, really? Okay, so when did you get your first Porsche Turbo? What year?
No, that was a few years in. That was probably like 2012 or something.
Gangster.
But that was just the fruits
After
of the
you
labor.
fought through
You do this stuff for money,
2008?
right?
No, after you fought through 2008, he got his Turbo. Figure
That's
it
when I
out, people.
started. That's when I started. So I got to actually start through chaos, right? I actually got to start through chaos, and that actually kind of sets the bar for what you can tolerate. But so, anyways, back to kind of the point of this, like going upstairs, what really made this clear for me was you just start to watch stuff from a different perspective, right? You're starting to see things move, and you're starting to put things together. And my first instinct was like, just track the positions, just track what people are doing and why. And before I knew it, it was like, wow, this is insane amount of size and volume behind some of these strategies. Strategies where nobody really knew who the counterparty was. Nobody talked about them because the reality was like you'd make a trade and it might be a couple thousand here and there, but you never thought to like put it all together and figure out what the bigger book was. When I started doing that, I mean, it was not long before I had a spreadsheet with like millions of trades and positions, and it was just insane.
What he just said was that Ken at Citadel paid for his island house in the Bahamas and his Porsche Turbos is what he just said in plain English. Because
Kenneth said it all. It's so funny. I mean,
the big
one of my
guys
favorite
aren't as smart.
traders.
The big guys are predictably boring, playing golf, getting massages, while Vols is working. If you know what I mean.
Don't knock them. They make a lot of money. Ken's a smart guy, but not in the same domain, right? Like, it's funny. One of my favorite traders actually was a Citadel floor trader. He kind of like showed me the ropes a little bit in a way that opened my eyes to some of this stuff. But I think at the time Ken he was known for having an office in Chicago where I believe he had a garage full of Ferraris in the basement. And I was like, man, that is good stuff. That's why you do this.
He rents a warehouse for me for his cars, bro. He's a fucking tenant.
Yeah, no, I believe it. But yeah, that's different ballgame altogether. Going back to the positions though, like, I don't know, a lot of you guys traded in 2018. Maybe some of you guys didn't, right? So we had this massive kind of chasm. A lot of people liken what's going on now to 2018. This rates creeping up, Trump at the helm. It wasn't just Trump volatility. This stuff was creeping up for a long time. A lot of these positions were being built like in 2012, and they kept growing. And as they grew, they became bigger and bigger and bigger, right? A lot of them are pretty basic. I mean, one of the positions that you guys see every day, or used to see every day, they're kind of doing a little bit of a different thing now, is this iron condor and the 0-day options. Very boring. I mean, it's exciting sometimes when we get near it and it's like low vol, whatever. But the reality is like that position will never move the needle in terms of actual market impact. It might have a little bit of a fleeting moment, but who cares? Like the day expires and we move on, and then on to the next thing. There are some positions out there that just don't show up in the same way on the gamma chart, the charm profile, all that
what
stuff.
Vols is saying to you right now is that he was making money in June, I want to say 2 months ago. And then he made more money in June 2 or 3 times in June because it got expensive and cheap again. And Chris and Benjamin and Vols were all making money in June when it was 2 months ago.
Oh yeah, no, I mean, you're supposed to make money all the time, right? But how'd you get to 2 months ago here? I'm going back to 2018, dude.
No, I know. I was just pointing out like recently, 2018, that's good. But I was just pointing out like the obvious that, the professionals are time travelers. These guys play on a different level. They play heavy and they play on a different level.
You also can't get anchored to views. I think that's what's funny about Twitter. Like I get trolled sometimes. Oh, you're bullish or bearish. Like, dude, you can be bullish 1 minute and bearish the next. There's money to be made all the time. And really, you need to have a mindset. Jem says be like water, but that's exactly true. Agnostic. You need to be able to go with the flow and respond to what you see. And that's actually where you guys have an edge. Like everybody on this call, with the exception of some, mostly retail, right? So the beauty of this is like, you think you have some kind of penalty for being retail. You think you're disadvantaged. You're not. The advantage is like when all these giant freaking systems have rules that they can't turn around this cruise ship, like you're in a speedboat basically.
And they have and they build systems that are like singular and specific to them, so they're not really taking outside information in. Benjamin did a video. You've talked about it so many times that I think you're a wonderful person for doing it. Like, you just cannot accept the fact that you can't beat Wall Street or Chicago easily. Vols will help you. Benjamin will help you. Like, Chris tries to do his best. Chris made so much money he could buy a Ferrari dealership, correct or incorrect, in the last 4 months. Vols, like, nobody, like, there's a few people, but the difference between Chris, Benjamin, and and the other Chris that you don't. If you think Vols talks over your head, you don't want to listen to Rockstar Chris. Trust me. Like, Vols is doing his level-headed best to help everyone make money.
Sure.
He is a true capitalist. He is a true patriot. He wants America to do well. He wants all of you to make money.
Yeah, for sure. I mean, of course. And there's a lot of money to be made here. And the whole thing I kind of bring you guys is like, you're not going to make extra money by like trying to copy what market makers do, but you do get to see the influence, right? And so kind of circling back to 2018 when all this stuff started blowing up, for me at least, it was being upstairs, getting to see things from this perspective that was like, it's almost like seeing the Matrix, because you're the guy who's supposed to be in front of risk. You're the guy that's supposed to get defensive and offensive. You can quote things to take markets. You're not always a market maker in the sense that you're like getting your bid hit or your offer. You're trading against other market makers, so you have to be sharp. You have to have a good read on the market and have your you got to have the pulse all the time. Now,
Bear in mind, Vols retired to the fucking Keys before he was 40, like on an island. Like, when he's saying this stuff, listen, he actually did it. He actually accomplished it. He actually set a goal and accomplished it and got out of the game before he was 40. I'm over 50.
I'm
still in the game. Like, Vols won. Like, if you're not listening to him, you better be paying attention.
No, I appreciate you. I'm by no means out of the game though. It's just the game is changing, right? And so, but it's all like seeded by these big ideas, and they keep knocking in. They keep showing their hand. 2018 was systematic stuff. It was like literally we had the biggest players in the space, just kind of building this massive position creep into the market structure, right? And so by the end of it, I shouldn't say the end of it, it kind of carried through 2018. But when Trump got on board, 2017 was ironically like one of the lowest vol periods, both implied and realized. And then what happened was things started to break, right? I'm not going to talk too much about Volmageddon because that wasn't my main interest. A lot of guys nailed that moment. Some high profile wins, and like that was a structurally flawed product. There's a lot of edge in finding those kinds of things, and there's products like that right now that are flawed. Maybe not to the same extent, but they're there. But what happened in 2018 was this: these positions started to become riskier and riskier, right? So we had massive put writing funds. And people look at this as like, oh, that should stabilize the market. There's a lot of gamma sold to market makers. Well, yeah, that's true. You guys know how gamma works, obviously. But the reality is like that's like a passive.
Listen. What Vols just told you was he bought Vol low and sold Vol.
No, but we did that
to people.
We did
his
that
friends
over the
nicely.
course of this, right? We did that throughout the course
won
of
it.
this, but we got stuck with positions that just kept running us over. Now, at the time, if you guys remember, like realized vol was low, implied was low, skew was low, and then as we went down, these funds started showing their hand. And this is where tracking customer flow gets really interesting. You guys can do a little bit of that yourself now with tools like options depth, and obviously a little bit of insight from what I share with you guys, of course, how to do it. But when these guys started knocking in, it's like you have positive gamma to be hedged, and then all of a sudden when they step in and trade, it's like discrete negative gamma hedging. So you imagine just like the system that's like cleanly buying 1, 2, 3, 5 futures, and all of a sudden someone comes in, they're triggered and they sell 50 futures at once or whatever you've cumulatively bought. That changes the character of the market. There are guys out there doing analysis on the gamma profile that at the time you really only had a naive way to do it because the CBOE didn't have the data set available. And ironically, even though we were stuffed with gamma, the market began to move. It was because we started to trigger their knock-ins. And so it got to a point where I'll state it. I'm not going to name names of the funds because it doesn't really matter. You don't really want to do that. That's an easy way to get in trouble. But there were a handful of iron condor funds that were just huge. And there were a handful of put right funds that were huge. Some of these are still in the market. Some of them aren't levered, but the ones in 2018 were actually pretty levered. Yields were very low. I know now they call it yield stacking. At that time, they called it yield replacement. It's kind of funny. Like people just, in reality, it's like market structure one way or the other, yields one way or the other. People want more yield. So they layer short options positions on top of like treasury books, all that kind of stuff. But what was happening then was this yield chasing because you couldn't get yield anywhere else. You were just selling options into the ground. And the way to do it was harvesting put premia. And so they had these genius strategies like to sell put 1x2s because the idea was if you actually breach the trigger, the market's going to get volatile and you're going to make a lot of money on your convexity. Well, the beauty was that never actually happened. But they just kept knocking in their triggers. So we go down and puts that were 10 delta began to be creeping up 20, 30. We were keeping the market balanced, but they would have to come back in and just hammer their positions and roll them out.
What Rolls just said was he got rich off these fucking morons because he was smart. That's what he just said.
Easy.
Like plain
this
English.
was one of the hardest periods in market making. There were a lot of guys at this time that were struggling, right? It was a difficult period to manage because there was no end to it. We talked about like there's no real low in vol. Well, finally it started to pay off. When it did, the big takeaway was like, wow, you have to know customer flow. You have to know their triggers. You have to know their tendencies because it can change your entire perspective of what comes next, right? It's not only just long or short, it's actually what their behavior is, and you have to watch it over time. That was eye-opening because you go into this and think like, oh, all the modeling makes the money, all the strategy makes the money. Well, it's actually like poker. And so when these guys start knocking in, you have to understand like when they're going to stop or if they'll stop. And so in 2018, we had all these puts and all these giant iron condor books. Now, you guys look throughout the chain right now, and the biggest positions are like JP Morgan, right? So the biggest things out there right now are like 30,000, 40,000. They're concentrated. At that time, there were 200,000 iron condors out in the first 12 weeks. So in those first 12 weeks, you had a massive book. Now, iron condors is 4 legs, right? That's almost 1 million contracts open across, those like first 3 months. And what started to happen when we started flipping through them was they'd have to buy their put spreads and sell down and out like longer dated put spreads, right? They kept doing this to rebalance and defend. Ironically, a position that's like kind of defined as a max risk gets riskier because you keep trading yourself out of P&L, like out of the range, et cetera. But when you do this, when they did this, they started bringing massive trades to market that all had bigger and bigger delta implications as the market went down, right? And so we kept going, and the pressure on futures got larger and larger and larger, and it kind of distorted things. Now, at the time, this is where it gets kind of funny because I was on Twitter talking about this stuff anonymously. If you guys know the account, I had an account, Pancake Patrol, that was like,
no, don't say that. But like, tell them how the CBO like rang your phone.
We'll get there. People don't like when you talk about things that cause problems. It is just what it is, right? So the kind of cascade that was set in motion, I thought was fascinating. I don't have any kind of skin in the game. I had no perspective on like who cares to make what narrative out of it, or whether there was a real market structure problem. I didn't really care. I just thought it was fascinating because I could see that all the stuff people are confused about. Why is skew so low when it's realizing? Why is there this big distortion between cash VIX and the next term? All this stuff made so much sense through my lens. So I was like, you guys just don't get it. You have to pay attention to these things, and this is what's happening on the inside. And so I was careful, or so I thought, and I was a little bit edgy. I was the same person I am now, but I had this anonymous account that I had cleared, and I had talked about this stuff. And I kind of tried to show people like what's really going on behind the scenes. I connected with a lot of people at the time, and it was great. It was a really challenging period, but to be able to kind of like talk through this stuff with interested counterparties. I connected with Ben at the time, a lot of other high-profile names, just to kind of explore these ideas.
Other market makers that have private accounts that were, still trying to like help, right? Kind of vibe.
Yeah, no, for sure. And also like they were in the space too. They were like actual players at the table, right? And so you had all these people looking in, wondering what's going on. I was like, dude, here's what's going on. And so you realize right away when you start seeing who's following your accounts, who's archiving your tweets, um, who's actually paying attention, and it's not always good attention. And so what it came down to was, at one point I'm watching this stuff and I'm explaining why the market's selling off and kind of giving levels and all this stuff, but really just giving my opinion on how 200,000 iron condors are really going to make an impact on the market. Because it was very tradable. Like for us in the market making perspective, it was different than maybe
What he
the
just said was he bought more Porsches and an island in fucking Keys, is all he said.
Well, I mean, some of the best trades, I still remember like pounding my fist saying we had to hold certain positions because you knew if you track the positions, like I had millions of contracts on a spreadsheet. I knew exactly when anybody or any one of these funds was tapped out, so to speak, that the influence would be exhausted, right? There's no reason to keep going once the pressure that is doing the damage, it takes its foot off the gas. And that's a big thing too. Like these markets bottom aggressively and then slingshot back. You have to know why they're moving and why they bottom, just to get in, right? And so,
Lots of Porsches, lots of boats for Vols
no,
in
no,
that
but the
time
Porsche,
period.
no, not my personal life here, obviously. But no, it's good money. But like the best money is in those moments. And what I'm trying to tell you guys too is like those moments that are the most profitable don't come from like having 10 bips of edge in like a skew profile or like a skew position. They come in understanding when the market's going to turn because of these positions. In 2018, it was obvious to me. And if you guys look through some of the news, I guess the volatility news after that, you guys know which firms were in trouble in terms of like the funds that were doing this kind of stuff. Some of them had like legal hot water. Some of them just really, really suffered and never came back. But they all learned lessons eventually. This stuff blew out the market all the way down to Christmas Eve. I'll never forget this because I was in California on a vacation with my wife and kids, and I had to go back for Christmas. Like it was ridiculous. But the trading was so good. It was just so much money flying around when everything was breaking at the end. And that was ironically when everybody was scared to hold the right position, right? It's funny, like if I had the book to myself, and this is probably where these big firms make the most money because I really believe that the best edge comes from tracking the flows and the influence. And when you look at the difference between like smaller prop shops and maybe, Jane Street, they know when to press and hold. And so at that time, I think 2018, it was Christmas Eve. It was like at some point they interjected with some kind of statement, Nuchin maybe or whatever, whoever it was. But in reality, all the interjection happened when the biggest positions already were cleared. And so when like funds that were writing positions down and out like 1 week, really just like basic stuff, got to a point where they were selling things 9 months out at like 20% of their capacity, they had no more bullets. And then what happened? Like skew performed beautifully. If you owned hedge puts, the market slingshotted up so fast you didn't even have time to sell your futures. You made a fortune. And of course, then it all kind of goes bid again because the stuff that was making it low disappears. Distribution kind of normalized, and all this stuff makes money for you, whether you're directionally trading off it or whether you're managing the market making book.
What he said was Porsches and private islands, people.
For you guys, sure, but for us, it was like it was such a good
It was
experience.
real Christmas. Just say you had a good Christmas, bro, even though you weren't with the
Of course.
family.
No, of course, that was my best year ever. But the takeaway was really like it seeded this idea that the positions matter that much, right? Like they changed, they recalibrated. Funny enough, like most visible problems, or I would say the iron condors were so visible and obviously well known. I think probably most people on this call know who those firms were. It doesn't even matter what, the sizes were huge. But the fund that did not like anybody talking about their impact on market structure was still a mystery to this day. I'll never forget being called into compliance to like basically tell me like, what is this? I'm like, what do you mean, what is this? I'm doing exactly what I said I would do. I'm just talking casually about what I see. And I ran this by compliance and legal before I did it. Now, what happened was somebody was putting pressure on the powers that be to get things removed, right? And so when I was talking about market impact, somebody else was looking at this through the lens of liability. And you see this today. I make jokes sometimes about PR and market structure, but it's true. It's a big deal out there, right? And so
Being on page.
Yeah, I mean, at the time, I had this cute little account that didn't even have any followers. I think I had 1/4 the amount of followers I have right now. And I was anonymous and mostly memes, but I would talk about the flows. And this one fund did not want any part of it. And so at first I was like, who are they? I don't even know which fund this is. This is just the put right position. And then kind of the pressure intensified. I'll never forget at one point, even though I had like everything, I crossed the T's, dotted the I's, made sure that I wasn't doing anything out of bounds, because there are rules about what you can and can't say when you're actually handling flow. And I wasn't handling flow from a customer perspective. I'd never touched customer orders as a broker, but it doesn't matter. Like, people just did not want any part of it. And so this this giant position finally kind of put a muzzle, or like put pressure on the CBOE. That's when you realize that the customers that have the leverage actually matter way more than the rules. And so they start putting a little bit of pressure, their thumb on the scale, and suddenly it doesn't matter what I've done. I'm just told to shut up. So if you guys ever hear about Pancake Patrol, what happened at that time was I was just talking about skew impact. I was literally talking about how these customers and what they had to do to basically defend their position were completely wrecking the vol surface and the market dynamics. From a very technical perspective, right? I wasn't talking about anything, I wasn't speaking badly of them, just talking about the flows and the impact. And they wanted me to shut up, like, no matter what. I'll never forget this. It was like expiration.
No.
Hold on,
Back
let me
when
finish this one real quick. Hold on. This was
I had
expiration, and it was, if you guys know how OPEX worked then, it was serious. Like, the serial expirations were the most important expirations. So we didn't have, a daily settlement of any consequence in 2018. It wasn't like it is now. Everything was still concentrated in the weeklies, or sorry, the serials. And I'll never forget this. Like, the most intense trading moment is really that hour before expiration, meaning the position stopped trading at 4:15, 3:15 Chicago time, Thursday before that third Friday. And
Well,
as an
tell them
upstairs trader,
the
let me
difference between
hold on.
350 and 352.
Well, at this point, it was like I was the guy in the seat that was supposed to defend the position, manage the risk, and close things down. And I'll never forget getting a phone call from a part of the office that shouldn't need to call me, saying basically, get up and come talk to me. And I was like, dude, I can't come talk to you now. This is the most important moment of the month. And the takeaway was like, no, this is important. If you can't come now, come right after the close. It was basically, no matter what you've done or didn't do, just delete your account, go away, or they're going to come rip it out of the fucking wall. I was like, oh, wow. That was a spicy moment. I'll never forget how like paranoid I was. Here I am, just like, I am the same person I am now, right? I'm just trying to talk about stuff that I like. And they're like, dude, you can't say these things on a public feed. Like, what things? Doesn't matter. You can't say it. And so I was kind of shut up and disappeared. And eventually it I mean, obviously, it kind of changed my perspective a little bit, but it started to click, right? This kind of pressure in this kind of space, when there's that much money floating around, like, nobody wants to think about the problems of market structure. And when you guys look at every time the market cracks even just a little bit, what you see, and this is not a knock on the product at all. Like, trust me, I actually believe in most of the CBOE's products, but you see them spin up a PR defense machine for a reason. It's because nobody wants to talk about the problems in market structure. And so I went away. I was, I got the message. I went back to work and didn't really pay attention to it until after COVID. Obviously, the space has changed since then too. Like, Jem blew up his account. Not like, I mean, no pun intended. He became a popular figure in the space and kind of really
Because he looks at
cracked
fucking
open.
calendars. Oh my God, bro.
So he cracked open this like domain where now it's completely okay to talk about this stuff. So I feel like I started it out a little bit. I went dark when I was pressured, obviously, but then it's like it's a Pandora's box that's open now, right? So no one's going to stop the dialogue in this space anymore. And the best you can do is maybe calibrate how you operate on the institutional side or the market making side. And so now you have this thing where it's kind of just an equilibrium, a new equilibrium, and the rules are kind of different. And so the institutions that blew up all this money at the time, they learned an important lesson. And I think, I teach this all the time to you guys in the Discord or the mentorship, that like what the lesson that they learned was one of concentration. And so the idea being that like when we when all this happened in 2018, all these firms realized that they have a huge problem when they're overly concentrated. Like, why would you put 200,000 condors on the profile at once? Even positions that are 12, 15,000 or 20,000, like they're big and they're noticeable and they stand out. And they get hunted when they're strained, right? Especially when they're so visible in terms of their knock-ins and their triggers. And so as things started moving electronically, and I'm sure the CBOE responded to pressure from customers and like hedge funds to do this too, they filled in the calendar. And so they filled in the calendar in a way that allowed all these funds to do things that basically it's like a casino, right? You place many bets, not just one big concentrated bet. Like no casino wants just one whale to walk in and flip a coin with them. They want a ton of small fish. And so quant firms, the whole perspective is kind of the same. So you run these strategies, but now it's distributed. We get to see influences all the time. We get to see concentrations all the time that dwarf some of the natural tendencies or the natural positions. We talk about it all the time, like the JP Morgan collar is an obvious one. That one's not going away. That's structural, not disappearing. But even JP Morgan, when they started doing call rights, they decided to go dark, like in a way where it's not visible to people how to find these things, because they understand that when you're being watched, when everyone else in the space who's well capitalized understands your constraints and your triggers, well, that's a serious flaw. And so after 2020, everything kind of went more electronic, more algorithmic, into this domain where like you couldn't track things as well, and the concentrations just didn't really build up the exact same. But here we are now, right? And so after 2020, the CBOE also made certain data sets available that just weren't available before. So in the past, you kind of had to do a lot of inference to figure out what was even tradable. When I left my firm, the first thing I thought was like, okay, as long as I know the positions, I'm fine. I can trade against the influences as long as I know the positions, right? Because it's the hedging of the positions that drives the influence. Well, when you're on a market making desk, you do some pretty novel things to figure out who's doing what. Some of those things even include like just trading every order. You just fire off one lots into everything so you can build a profile of who's doing what down to like the bank desk doing it. You can't do that from our perspective. So when I say like it was like flying an F-18, moving into a Cessna, there's some truth to that, but the meat of what you can do is still very, very viable. Now when you have the right position and you understand how the hedging flows work, you actually get to trade in the same way. You get to predict a lot. So if you guys look at my feed and you wonder what I'm thinking or why I'm thinking it, literally, I'm telling you very honestly, I get made fun of sometimes because I don't even know the moving averages. Don't care. In my view, and there's a lot to be said for synthesis, of course, whatever. I'm kind of being exaggerating here. But in my view, this stuff trumps all of that, right? What good is a moving average if someone is forced to be buying hundreds of thousands of futures or delta, whatever, into that range? Is it going to act as the same? Like, sure, of course, it'll generate something. But the point is, there's like a force underneath the market that's always on, and it depends on the positions. And it doesn't go away because of macro. It doesn't go away because of fundamental. It's just always there. Now, there's kind of a beauty there because I say this all the time too. There's a duality in the option space, right? So an option is going to have gamma and vega and all these great Greeks, and it's going to have charm, and Vanna's kind of like charm in a way too for a number of reasons. But the point I want to get at is like there's some conditionals there that define not like what's going to happen just as a base case, but tell you a lot about how the market's going to behave if something happens, right? So I know it's frustrating for some to map themselves to this like if-then line of thought, but it's important to do that because that is the truth of the way things work, right? If I have a position as a market maker that is short gamma, I'll be very basic here because on my tweet thread too, I talked about a long straddle. How that position evolves is pretty basic. It's like nothing when you're on top of it. It's very boring, very vanilla. But as you move away from these positions, they become dynamic and they become conditional. And so second and third order effects
Tell
start
them
to
how to
emerge.
leg out. Tell them how to leg out. Tell them how
Well, this
you
is not
make
so much
money.
about legging in or out. This is more about like spotting, because it's not like you want to trade what's on the books. You actually just want to see how what's on the books drives the market and then map trades to that. And it's not always obvious what that is. And some people get stuck in their lens.
Did you just say you're a time traveler? Did you just say you're a time traveler, bro? Do you have a time machine? Because I know you made your money in time.
You don't need a time machine. And what I'm telling you is there's prescriptions here that I don't know why it wasn't more popular. I think maybe because the data wasn't available at the same time, right? So I'm sure if like this data has been out for 10 years, maybe I'd be way late to the space. But when I came back to, social media and Twitter and had my non-compete and my sit out, it was obvious, like, wow, this is ripe for the taking. There's this whole niche that's not even there. So many people don't even know what they're missing because of all this, built up time where you have the wrong idea. And now, like, you have the right data. That's point number one. And that hasn't been accurate for most of the history of this whole options retail domain. That you haven't had the right data. Now the right data is there. It's not the full picture, and I have, I'm being completely honest, I'll say there's a lot of holes right now in the data that is available that we will patch up, but it's much better. I mean, a lot of you guys have already traded this for a while. I see a lot of names on here on my feed and the comments here that have been doing this for like, at least a year with me. You see it over time, and once you see it, once you do it and like land a trade, it's like you're hooked, I think, is one way of putting it.
You
But
could buy Porsches and private islands.
well, I wouldn't even think of it that way. Like, I tell my son all the time at baseball, like, dude, stop fucking looking at the scoreboard. Like, just start looking at the mechanics. Like, it's right there for you, but you have to stay focused and you have to think like, all right, what's the
Can you
next
do,
thing?
Vols, can you do hand signals like Chris is doing with his son when the lights are out?
Oh, the ARB stuff? Oh yeah, that's all basic stuff. I was fast at that. It's like sign language. But that's not gonna make you money, obviously. But
But it is making money, bro. It is absolutely 1000%.
for those guys, yeah, sure.
Babies are being trained to make money. Trust me.
No, but for us now, it's like this is just a game. This is like poker, and so now you get this chance to play poker where like everybody at the table kind of has to play with their cards up. In a way, they do things to kind of hide their positions as much as they can, but they're playing poker in a way, and you get to see their strategy. And so, like, what I'm telling you is the market maker strategy, but what I'm telling you also is like these customers have strategies. You put them all together, and you get a predictive path. It's not rocket science. It really isn't. I mean, like you can glorify all you want, like how complicated the calculus is behind the modeling and all that stuff, but that's not the point. What I try to demonstrate for people is like there's an intuition here that you can achieve that will allow you to predict things with much more ease, right? Like when this guy Jem goes on TV and calls a turn to the date, or is very clear about the fact that we're bullish or bearish in a certain range, like it's not rocket science. It really isn't. It's the same data that I teach you guys how to look at and how to read. It's all there. It's like all these positions create a prescription, and that prescription is kind of balanced against what's unknown. I think that's like the most healthy way to look at it. You can't be strict. You have to, when Jem says be like water or whatever, yeah, it's true. You have to understand that there's a prescription for a path where, like, if nobody came to the market, what I want you guys to understand, if nobody did anything, our systems, when I say our systems, I'm not with a firm right now, but on the market making side, our systems would do something that would make futures go from one point to another very clearly over a certain time frame. And so now, instead of having this bullshit idea about like a random market, which maybe was true 100 years ago, you actually have an equilibrium path. So instead of seeing like the market as the default path as like a spot price change of zero, you have a path that's effectively baked into the positions. And it's kind of complicated, but it's not rocket science. You can figure it out. I teach so many guys how to do this in the Discord and the mentorship, and it's basic. And then the next level is like, okay, well, what's the next interaction? Beyond the gamma and charm, which is like a daily thing, good for us because we have 0 day. It's like so many reps, but there's more complicated stuff behind it. It's not impossible to learn, but it's kind of tricky for people because it's dynamic and it's conditional. And so, just like, for example, you need to understand how the market interacts with gamma. That's kind of the point about gamma. It's like it's not something that happens unto itself. When people start trading in one direction or the other, the market behaves either erratically or with stability because of gamma being long or short by those hedging the options. Just like that, you have Vega profiles. Vega is a little bit interesting because Vega, you have this whole VIX complex. I'm not talking about futures necessarily, but the options on the VIX complex drive the VIX. Well, I've said this 100 times if once. VIX is strictly linked to the S&P options chain. So when options on the VIX drive the VIX itself, and the hedgers have to kick in gear and start buying VIX futures in order to land a position, well, that gets pumped right into the SPX complex. And depending on the type of position in the SPX complex, those price changes, those vol changes on those profiles force a buying or a selling of just S&P Delta, ES futures. And so all this stuff is interesting because it's like layering different predictions.
Well, that
on
goes
top of one
back
another.
to the underlying versus 10x around the underlying, right?
Yeah,
Like,
when you have underlying
you
assets
got $100
that
trillion
are linked.
market, but you've got a, I don't know, gazillion dollar market of options around it. and Vols has, listen, I talk to him, I call him on the phone when I'm confused. I'll say this plainly. When I'm confused, I'm like, man, fuck this market, or I should be long this market, or whatever, like whatever feeling I'm having, my feelings because of my crystal ball, because I'm old and I do macro, like I call Vols, I'm like, hey bro, what do you think? And he's like, man, stop fucking guessing and just do this.
Well, I mean, like
Like,
you guys have heard me say a lot, like this moment we're living right now is kind of indicative of this. In February of even this February is kind of an easy example to remember. Like headlines didn't matter. Everything got absorbed. People were talking about how the tape was so strong because the headlines were absorbed by everything. Well, that was true until it wasn't true, right? And then when it wasn't true, well, kind of like magic, it aligned with the options calendar. That's not by chance. It's because the positions grow in influence as that calendar kind of runs up until expiry, and everything gets tighter and tighter and tighter, more gamma and charm driven in those last few days if the position supports it.
say
And then it
clench and
kind of
unclench.
breaks
Say
through.
clench and unclench your butt cheeks. Say it. Say clench and
Yeah, I
unclench
mean,
your butt
the
cheeks.
whole unclench thing is actually, it used to be called a window of weakness, but it's not always weakness. It looks like it right now, and that's true. It is a window of weakness right now. The headline that hit Friday after the close is almost comical. This is the type of thing where, like, I mean, to be honest, like if that hit Friday intraday, the impact wouldn't have even been the same, right? It would have been absorbed right away, which is interesting to think about because people are people. So when that's absorbed right away, then we start thinking about it in terms of what does it mean? It means less because it didn't create as much movement. We actually, most of us, if we're honest about it, we don't really think about things in terms of what should this mean. We react to how much the market responds to something and then assign like a coefficient of meaning to that headline. But the reality is, like if the position was different and the position might not have anything to do with macro, fundamental, et cetera, if the position is different, the response is different, which means, in effect, that our understanding of how important that thing is different. And so that's one of the huge traps that you have to try to avoid as a retail trader.
What he
It's
just said
always
was
it's unavoidable.
purity of data, the purity of where the money actually is what he just said.
Yeah, I mean, it's
Follow
data and
the money.
it's the chain reaction of what's actually moving things, right? Like there are not a bunch of people here right now selling this headline or buying this headline. I know we like to think about that way on Twitter, but it's not really what's going on. It's like we are actually observing a bunch of systems, doing a bunch of automatic processes based on what positions being hedged. And what I came to do, what I came to kind of explain to people is like that is knowable. That stuff, that hedging process is knowable. The positions are now knowable. As people try to hide things, I'll find them, and you can't hide everything, right? Because everything winds up in a listed space to some
You
degree.
you can't hide shit from Vols. I promise you that.
There's only so many places you can hide things. Like I've traded most of the space. There's OTC, but that's that's a dark corner, obviously. But there's a lot of things going into option ETFs, but they can be found, and
No,
there's a lot of
tell
stuff.
the people how you're going to add data for the stuff that people don't see coming
Yeah,
soon.
no, I mean, yes, it's more about syncing things together in a way that people can't understand easily. I think Gamma and Charm are great. They're awesome. Every single day you can see their effect. I think the next level and what I want to pursue is really, 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 really valuable. Very few people even understand the interactions, let alone how to find the things that cause the interactions, and then understand where the processes intertwine. But it's there. It's there for the taking. And right now, like your best guess is sometimes to eyeball things. I hate to even say that, but it's true. And when you do this for years and years and years, it becomes obvious where the strain is. But it's the same type of inquiry that Jem goes on TV to talk about. It's very, very robust. And like what's cool about it is you have a lot of stuff that just happens on a cycle no matter what. And so the more that you can predict and the more that you can link together that's predictive and kind of like not sensitive or depending on anything else, the better of an outcome you're going to have, right? Like I wouldn't say that I would never claim that like you could have seen the market was going to crash all the way to 4,800 or whatever the bottom was. But a lot of that strain was baked in. A lot of the absorption of the headlines and the risk was like effectively options that were going to expire. And you didn't need to know that we were going to go to 48.35 to make a lot of money on that move. What you needed to know was like, what was the general position? How much of a move could happen? And then the next level is like, what could knock in the vol complex to pay you off one way or the other, depending on what kind of position you had. Like a lot of you guys probably experienced this. I'm sure you could put two traders together. One of them has one options position, one has another, and you might have had a very, very different experience uh, based on how vol behaved in this range, right? And so now I think there's this kind of curiosity about this, and it's not rocket science. Again, it's very difficult, but it's very knowable. And so that's what kind of my angle is next, right? But I'm not going to lie to you guys and say that's like around the corner next week. That's a passion project that's going to take, I don't know, on the short end, maybe 2-3 months. On the long end, who knows? But it's going to happen, and I will
For the
obviously keep you guys
love
posted.
of the game. For the love of the game.
Yeah, I
Look,
mean, there's money
my
involved. It's
my
money
my
too.
my my boys can buy boats. My boys can buy Porsches. My boys can live on private islands. It doesn't matter. My boys do it for the love of the game, like Michael fucking Jordan. These
I
boys
mean,
are here to
Michael Jordan
have.
loved the scoreboard too, right? It's like it's everything. It's money. It's competition. It's whatever. But there's something I think everybody resonates with who's on my feed and who's in my Discord and who's in the mentorship. Like there's this curiosity that is just insatiable. Like there's something going on and it's not obvious what it is, but it's there, right? And it is knowable. It is exploitable. And I don't think it's going away. In fact, I think it's probably getting stronger before it goes away. I've kind of thought through this path. I've had a lot of sleepless nights wondering how would this go away? Would it go away? Um, there's really no reason for it at this point for any of the data that opens up to us to go away, and there's no reason for the processes that drive the market to move the way it does to go away, especially when the volumes are becoming more demanding of systems that are very, very strictly mapped to these positions. And so it's really, really important. I think if you've ever been vexed about market movements,
Contractual obligations of monies participated into a fund cannot beat you people,
yeah,
is
it's
what he
true. No,
said.
it's true. It's true.
Benjamin has said it, and Benjamin can't say anything because he has a license, because he runs, what's he got, 8-9 funds. He's got 8-9 hedge funds now, Vols. Like, he can't really say it, but he says it. And he posts videos about, how do you beat Wall Street? Literally. And then, and I'll say this publicly, I told Benjamin something, and Benjamin's like, tell Vols to call me. I got all the money he wants.
I mean,
Like, figure it out, people.
no, it does. It's besides the point. It's like you don't even really need to think about it as beating Wall Street. I don't know who's losing money in this or wherever where the big losers are, but you don't like whatever we're going to do in our retail accounts is not going to make a dent in Jane Street when they're putting up 20 billion or whatever it is per quarter. Like it's never going to make a dent. And so there's money there for the taking, and it's not going away because there's no incentive to change the structure that makes it go away. Like the same structure that we're talking about is a structure that allows these firms to make so much money, right? And so it is what it is. It's ripe, and I would encourage you guys, if you're new to the space, if you're new to my feed, it's well worth kind of paying attention to. And so I think I put together these threads this weekend just to kind of test engagement, and it was way higher than I expected. I'll give credit to my wife because she's way smarter than I am in so many ways. She was like, "You have to do more
And
educational stuff."
prettier. No, no, no. And she's prettier, by the way.
She's way
Way
hotter than
prettier.
I am. Yeah, I
Way
agree.
prettier.
But it's true. Like this stuff is not as well understood as maybe I think. I get in my echo chamber, and it's a tight echo chamber. There are guys in my group that know it almost as well as I do at this point. But there's this like curiosity I think that's going to grow and grow and grow. And some people ask, why do I do this? It's because people like it, and it's very, very robust.
Voles
And so I
is
guess
an
I want to just segue into.
Voles is an orca. He eats great whites when he's in the mood to. He's not a shark. He's an
I
orca.
like great whites a lot. I hate that analogy, but orcas are pretty.
Yeah,
It's
we
hard
don't
not to
care.
respect
We
them like
don't
that.
care about no great whites. They get eaten. They're fucking sushi. And Voles is an orca. Don't let him lie to you. He's
No, I mean
very
the
humble.
point is
He speaks
there's something.
very like pretty. He's very plain English. Filled with humility, But at the end of the day, Voles is an orca. He
No, I
will
mean
feed on
there
what
are a
he
lot of
wants to feed on.
there are a lot of really really sharp traders on Twitter and in some of my groups and stuff, obviously,
Yeah,
but
well,
a lot of
Benjamin wants to give you $1 billion. So you tell me that I'm arguing with
dude, you can't
Benjamin,
scale
who
this.
I
No,
absolutely
that's
love, who
the
wants
point
to
I try
give
to
you
make
$1
all the time
billion,
too.
bro.
No, okay, you have to realize too, like the part of the beauty of the edge that lies in our hands is you can't scale this to $1 billion. If I try to scale this to $1 billion, I'd be the target that I'm trying to hunt, and so that's not really doable in the same sense. There's some level at which it's scalable for sure, but it's not that. This is not like that's the reason those big funds blew out, and that's the reason those big funds become prey. That's actually kind of what our angle is. Like, we want to stay small, we want to stay nimble, and that's the whole point, right?
Race car driver instead of a bus driver.
Yeah, effectively, right? And so what I try to, like, let's say you have never even traded this stuff before, or never even thought about this stuff before, and it's all Greek to you, no pun intended, obviously. There's, like, I've done walkthroughs in the past. I'm gonna actually do them again this week in the Discord, and I'm gonna plug myself, obviously, because it's not the whole point of this. I like this stuff. I'm trying to build a bigger following too, but like the Discord is like hyper focused on this stuff. Like, people always want macro takes, all this stuff. I'm like, I'm sorry, you're not going to get that from me. What I want to kind of convey or teach, et cetera, is like, this is agnostic. This is outside of the realm of your view. This can be used to, like, reinforce your view. Your view should be kind of measured against this stuff in any capacity whatsoever. Because let's say you're bullish, like, there's so many times you get in trouble because you're premature, or because you just don't see when things have turned. But you could be agnostic and look at the positions and their influences and read it differently, and have a much easier time with entries and exits and structures. And so I guess just to round this out too, I'm going through the comments a little bit. I think people want more. Hold on here. So I'll put the link. I mean, the Discord link is in my profile. So we have, like, a free Discord that has a ton of members, and it's whatever. But it's very focused. It's just this, and it's grown a ton. Like, when I say it's grown a ton, like, this had maybe 200 members in August, right? When I started doing morning calls, it just exploded, because I realized, like, people actually don't know how to think of this stuff. People didn't realize that, like, long options are different than short options.
Here's a fun one. JECJT. Liquidity becomes a concern. I like that one, because
Yeah,
that plays into my bearish views, and I love it when you smack me in the forehead with your cock, your big 24-inch gold cock. Like,
no, come on, keep it clean, keep it clean. There are kids on this stream. Come on. Nobody said that in our comments, I hope.
Those babies
yeah.
are going to be pirates. Don't worry about my babies, bro.
No, but so the point is, like, it's I shouldn't say alarming, but I'm surprised sometimes. I guess, I'm kind of humbled sometimes, like, how many people just don't have exposure to this stuff and are just confused by it. So that's the whole purpose of the Discord. Like, we have free commentary and all this stuff. But what I have done before too, like, I liked options depth. Spot gamma has come to frame with a tool that's similar. I think even Unusual Whales might have something called Periscope now that is very similar, like, with dealer positioning construct. But there's still a lot of unknown about how to interpret this stuff, right? So the whole point of the Discord is to get people trained up. Like, the good thing about 0-day options, like, whether you're a longer term trader or a futures trader or whatever, the good thing is, like, you have basically new reps every single day, right? You have all this stuff that is giving you a chance to see the influence over and over and over, and different positions, different profiles, different strengths, different Greeks, against different backdrops. So what we do then,
What he just said was, people that get raw data, have talented people providing filter for raw data, or they don't, is what he just said. I'm going to stop there, because I'm not going to, like, tattletale, but, like, I said what I fucking said.
Yeah, no, I mean, it's true. Like, you can have all the data in the world, but if you don't know what you're looking at, it's difficult to make sense of it in a tradable way. And so I realized too, when I started doing voice calls, people just wanted to hear more of it, because they understood that, like, I actually did this. There's a lot of data providers that I think someone put it really well. They said they're mostly hobbyists.
No. I'm going to have some fun with you now. No. You said it. So you bought a lot of Porsche turbos and moved to a private island before you were 40. Is that what you said? Is that that's what you just said? No, you said that, bro. You said it, bro.
But
You
that doesn't
said it.
matter.
No,
You're
you
not going to
said it,
learn that
bro.
way. You're going to struggle that way if you're thinking that way first. Like, the point is, like, you get all the practice you want every single day. There's money to be made. Like, I have a lot of guys in my group that have made a ton of money, and they're out doing it themselves now, because it's not that hard once you get the influence down. And my value add is not that, I'm not a quant. I'm not going to sit here and run the numbers and tell you that we're going to go to, like, someone right here is asking me
You're
to talk
big
about levels
brain,
this week.
and you run quants, bro. Stop,
No,
bro.
but someone right here is asking me to talk
He
about levels.
runs quants.
Someone right
He
here.
is the boss of quants. He builds the systems, and then he creates real information for real people to benefit from, is what he just said. I'll say it out loud. Fuck that shit.
No, it's fine. But I am saying it. I'm just saying, like, let me finish really quick, because the point is that, like, we're saying the same thing. It's like, you have to understand what you're looking at, right? And so the whole point is, like, the filtering, sure, but the lens through which you read the data is important. So what we do in the Discord is obvious. Like, a lot of the guys in this room are in the Discord. I see them chatting right now. They're saying to stop interrupt me, dude. Give me 1 sec. Let me get this done before 10 o'clock too, so we can just move on. But the point is, like all the reps in the world are what makes you, better, right? And so just like at a market making firm, like we had meetings every single day. You would do this in a sport the same way. You have a pregame huddle, whatever. You review the tape and you go to the pregame huddle. You have to talk about this stuff on an ongoing basis, because if you don't, like if it's just cold theory or like a dead case study, it doesn't make sense. You want to see it in action all the time. And so we talk about it a lot in the main Discord. I'm going to add some stuff to the free channel this week. Actually, I'll do an intro call tomorrow at 8 a.m. to talk about like what actually creates these profiles. Like if you're basically new to this, I'll give you a bare bones like walkthrough to understand what it is and why it's worthwhile. We used to do this not every Friday. I would say 2 Fridays a month a while ago. We call it TGIF, like thank God it's Friday. We'd have a kind of a lax meeting and walk through some of the theory, the nuts and bolts that create this stuff. But we'll
Vols
do this
for
tomorrow. I'll
one
do a TGIM.
Vols
Thank God it's
for
Monday.
Vols for 1 second. Stock Wolf made a comment that I think is important. And I think it's important because his view, to help him with his view to make him more successful. His view was tomorrow. Can we talk about how tomorrow is not as important as maybe 1 week or 2 weeks out, please?
Well, I don't know exactly where the comment is or what it's coming from, but I mean, I'll speak a little bit about my view.
You made me go to goddamn Discord and learn this shit, so you learn spaces, fucker.
No, I'll figure it out in a minute. Hold on 1 second. Let me see here.
What he said was, "Thank you, Vols. I'll be attending 8 a.m. No shit. That's a smart move." Stockwolf says, when you going to tell us about the market for tomorrow and this week?" Stockwolf, and I think this is relevant.
Oh yeah, okay, no, that's fine. That's fine.
But I think it's relevant because a lot of people have that view, even though you don't have that view. You have a longer term view, and you blend away risk with your longer term view. And I think that's magical. I think that what you provide is magical, even from my perspective, because I mean, I don't need it, don't want it, and listen, I followed Pancake, when I had a dog for my fucking avatar and before I left Twitter. You don't remember that, do you, bro? Yeah.
No,
My little white schnauzer. Yeah. I got banned because back in those days it was what it was. But having said that, I think that when you going to tell us about the market for tomorrow and this week, bro, like I think that that's a very common theme, a very common thought. But you have to take a longer term view to blend away risks to be actually successful. Does that make sense, buddy?
Yeah, I mean, it's totally okay. People just want to be led sometimes. I would say, that's fine. Whatever. Like we talk about that in the Discord a lot too, and like I give my views, and I'll give more of my views in the Discord as well. But the point I want to make is like you're gonna do better if you learn how it works and then form your own view. My view was I've been pretty adamant about this. If you've been on my morning calls or been in the mentorship meetings, it's like I think that we're going to quote unquote unclench whatever. A lot of this has been structurally driven by the options position. And it's actually an interesting cycle because VIX comes after options expiration this time around, but VIX is going to become sensitive to a whole lot of stuff that's not necessarily friendly to spot vol correlation and whatever might happen next if vol comes off from a low level, which it could happen. Some of the stuff that I talk about all the time is important to understand that it's not just the index options that are subject to this, it's also the VIX options that are subject to these pressures. And then it passes back through the index also. And so there's risk there that hides in places or is maybe not easy to see, but it's there. And so we'll talk about that obviously, but that gets into more complicated stuff. This week, what I want to do is, we haven't done these TGF calls in a while. We've been trying to grow, and like so many things have been opening up. We have like literally three different partnerships opening up, and like from my perspective, I'm not public with all of them yet, but they're big deals. A lot of work coming up, and so I want to get back into the meat of this, get on a more efficient process, whatever. Instead of TJFs, I want to do Monday morning calls. It's more efficient to get ahead of the week than catch up to it. But to the Discord though, like the idea is if you're new to this, but you understand there's something there, or you've tried to figure it out before, whether you're a futures trader who wants to understand how the options influence the market, or an options trader who wants to understand how it influences the market and use options better to exploit it, fine, whatever. We'll walk through tomorrow morning at 8 a.m. how this all works. It'll be reviewed for a lot of you guys, but for some it'll be brand new. I will try to keep it as intuitive and basic as possible. And I want to do this on a regular basis for people who are kind of like, repetition always helps. That's never going to be not true. And then for the guys in the Discord subscription or whatever, we do morning meetings, but I'm going to start doing more educational commentary too. So this week, we used to do walkthroughs for certain promos, for certain reasons. I'm going to make them more of a basic feature because I think it's becoming clear over and over and over that we need that introductory level. Like you need to go through the fundamentals over and over and over. Even the best,
That's a
do the
great idea.
fundamentals
Who
over and
came
over.
up with that?
My wife.
Oh, really?
Yeah.
Really?
No,
Really, bro? Okay,
credit where
bro.
credit's due.
Oh, okay, bro. Just because she's prettier than me and I'm old and fucking fat
No,
and
it's because
ugly.
I have guys in my group sometimes who are still confused on the
Vols, you're a
smaller
goddamn
mechanics.
brain surgeon. You're a brain surgeon, bro.
No, it's
She's
just
prettier than
you
me, and
need
bro, that's
it's
good.
just you
It's
need to
good.
go through the mechanics over and over. You need to, and so we'll do this and
But
do kind of
you're
like those
so good at it.
walkthroughs.
You're so good at providing real information in real time to help people. You actually
If I
help
wasn't good at this
people.
after like 15 years of doing it every single day
No,
and
no, no,
weekend, like
no, no. I know I'm sounding like your wife right now, but like you actually help people. You actually help people like pay their bills this week. And I don't think that a lot of people understand that because you're a brain surgeon. I mean, I love you, kid. I love you more than you love yourself.
All right,
Like you're just a brain
let me
surgeon.
get to the meat of this then before it's too late. Because what I want people to understand too is like what we even do. Like it's funny to me. Obviously, you guys can see that I started this as a passion project, and it unraveled from there and is growing and growing. Finally, it's going to be like a big proper business. But the point is, some people are confused about what we even do. It's like who knows what it means to like interpret vol surface. It's kind of like a foreign domain. But the point is, the idea behind the Discord subscription is like to get in these morning meetings every day and go through this like you would anything else. Like if you're not doing this as a trader, you're not really that serious. You need to actually um, like prepare properly with the right lens and then review stuff as it happens. And that's what we try to do in the morning meetings. It's a quick 30-minute, every day, but it helps drill the concepts. Like it's not just me saying, oh, here's the profile. It's like, here's the profile. Here's what actually happens from our side of the equation. Obviously I say that, caveat, whatever. I'm not active in a market making seat, but this is how it works from our side. This is our concern. Like at a market making firm, you sit there and you talk about this just like you would in football, right? You're like, who's our opponent? Meaning, what's the position we're
Morning
facing
meeting.
today? Who are the
Say morning
customers?
meeting.
What?
Morning
Yeah,
meeting. You have a
yeah,
morning meeting with everybody, and then you come up with a plan. Correct?
yeah. Essentially, yeah. To some degree, it's like you need to understand the equilibrium path, what's likely to happen, and then where there might be problems. And because sometimes those problems are precise. Sometimes those problems, sometimes they don't happen at all. And sometimes the equilibrium path is exactly what you get, but you need to have a framework for preparing for it and exploiting it. And repetition helps. Like I've done these every single day now, basically, aside of a couple of gaps for personal reasons, like since August. And some of these are we store them in the Discord as well, just for the reason that you can go through and look back at what we were saying in real time, not like some kind of hand wavy BS about, oh, look what happened here. No, it's like we do this every day because sometimes you'll get to see things in motion, and
Did you
it's
just
so
say you
precise
prove it?
how
You just said you
precise they are.
prove it over time? Did you just say you prove it over time? Say it the right
I
way.
mean, of course it is.
You
Of
prove
course it
it
is.
over time.
I mean, of
Correct?
course it is. Yeah, of course it is. But like that's the whole point. Like you get to go through this over and over and over and see it in real time, ahead of time. And so that's like the meat of it. And we're going to add more educational stuff to it starting this week, actually, to get people kind of trained up in the right mindset. Again, kind of basic, because a lot of people come to this from a 0-day perspective. You don't need a lot of capital to trade 0-day options. And that's fine. And so like that's to get a surface level intro and understand this from a lens of a market maker, I think is valuable. Now, what else, like
It's
besides that,
actually
there's a great
priceless.
chat,
No,
there's
no,
research.
it's
Yeah.
priceless. What you provide is priceless.
Well, we're also going to grow and add more people to this too. We're in the process of this, which is going to be great. But when I started this too, I knew it wouldn't just be me in the end. People would come to this and from the other side too. And it's like if you build it, they will come. Well, now they're coming. But the point is too, it's not just the morning meetings. It's like there's a good chat and there's a lot of professionals in there. Obviously, it's all anonymous, but there's good commentary, good traders, and soon analytics and pricing as well. Analytics already, but pricing, I think, I'll put some pressure on my admins if they're listening to get that stuff out as soon as possible because it just helps to have this stuff like on hand, callable, queryable at the same time.
Why are
as
you
we
trying
talked
to
about
make
it.
everybody a capitalist and make them all successful and add to the sustainable tax base and be a real American, trained capitalist? Why are you doing that, bro?
Well, I just want people to understand what they're looking at, right? And so if even if there are people who it's just a curiosity for, there are students who just want to understand how it works, and that's fine too. I don't really care what you do with it, as long as you're doing it right. But there are people who want to learn this
What
at
he
a
just
deeper
said is
level
he
too.
wants all of you to win. He wants every one of you listening to win. He
Okay,
wants
let me finish
all
up
of
here
you
really quick.
listening to win.
Let me finish up really quick, and then just wrap it up because I have to go too. It's already 10. I'm gonna just mute this here. Okay, so obviously the Discord is a good intro, but once that's done, or sorry, once you're kind of like through the surface level, there is a lot of depth that's not available to everybody, right? And I'm not going to claim I'm going to give you guys any proprietary knowledge or like reveal anything about the firm I work for. I'm way off contract. It's besides the point. But the interactions are difficult to understand. So uh, when you come in here, obviously you go through the morning meetings, it's good repetitions, but if you want more, that's what we have the mentorship for. We get asked this all the time. And the reason I'm bringing this up now is because there's somebody joining me this month, hopefully is listening to the call. Like I said, if you build it, they will come. We finally have that. It's absolutely correct. So it won't just be me. The market making perspective from my side is great. There's also this whole bank vol management side that's super important. Different perspective, different influences, different levers of control, but very valuable. And so what the mentorship does, it allows you to kind of like pick our brain for one, but we go through these in depth. So it's not just like a little bit of surface level stuff. We're kind of building an archive of in-depth calls, more nuance. This stuff that's kind of not easy to get with one repetition, and you need more walkthrough, need more kind of coaching through the different interactions. That's what the mentorship is for. So what I want to be clear too, because I asked so many questions about this stuff. Maybe people call it a membership, a mentorship. The Discord is a subscription that gives you the morning meetings, and it's excellent and all this stuff. It's great and it's growing. But the mentorship is where you get the education in deeper depth. And so the point there is to go through the basics, kind of one by one by one. What is the delta hedging process? Why does it exist? What are the constraints that we face on the market making side? Again, nothing proprietary. Base level disclaimer, whatever. But what are the processes that keep this stuff in line? What are the systems that make this work? And how does it work? And I'm pretty candid, obviously, you guys hear me talk, like there's nothing I hold back, sometimes to a fault, but it's knowable. And so we go through the basics like gamma and charm and speed and all this different stuff. And then we cover the vol effects too. So it's not just gamma and charm. Those are great everyday things for the 0-day profile. But the stuff that really makes things move in the end winds up being more about volatility and Vanna and Volga problems than about gamma and charm problems. You guys have probably seen this yourself. Like the gamma profile disappears in a day and it's going to come and go. But the real positions that don't move that frequently, that actually have some kind of unstable interactions, they're a little more difficult to understand, but we walk through the different things like skew and like wings and ratios, the things that create positions that cause instability. And so we go through this. Next week, we'll talk a little bit more about the vol surface mechanics, like longer dated influences, the VIX process as well, like how the VIX comes back and feeds back into the S&P profile to cause index pressure. It's really, really influential. And it's not clear sometimes how it works. I think, I did a call on YouTube called TGIF-ing over. It was about the JP Morgan collar. I think if you're new to the space and you want to understand what we touched on in the vol domain, just go search for that. That was like a lesson unto itself. You'll get a lot of depth from that and understand why this is so important. And I think it will give you a new lens with which to look at something like August 2nd and August 5th. And I want to remind you guys that like it's not just that moment; it's the retracement of that whole move too that is subject to the same influences. And so we go through that, and obviously you guys know we talk about the actual flows, the mechanics, not just the mechanics of the flows, but like what are actual funds doing. Not so much for you to like bootstrap and kind of copy them, although you could, but really just to understand what creates the market structure. If you go to like, I think it's maybe Goldman Sachs or whatever, they publish something every OPEX, and it's kind of beautiful. I've kept some of these because if you look at the picture of the open interest on OPEX of the expiring inventory, you'll see patterns that are there, and they're there because a lot of the stuff is structural, it's cyclical. So all the stuff that I talk about, like building these profiles of different flows, we talk about some of those as well. I lead you through how they actually operate. It doesn't really matter whether you name names or not. That's not the important part of this. It's about assigning patterns, positions, and seeing how they work, right? Like last week was a great opportunity to see one of them in action. I'll name this name because it's obvious. It was XYLD. This one is interesting because they work a certain way. It's like a buy right fund. Works differently than the NASDAQ. So the NASDAQ QYLD has a different profile than the XYLD. It makes no sense to me why that's the case, because all the other YLD funds operate like the SPX version. But that's why Thursday, for example, everybody's waiting for a bid in the NASDAQ into the 2 p.m. to 4 p.m. hours. And that's why Friday, everybody's waiting for an offer in the indexes between 11 and 11:30 and 1:30. It's all just gaming these funds. The big one is obviously JP Morgan collar. The call I put on Twitter covers, or the call I put on YouTube covers so much of that. But the point is knowing how it drives the underlying market itself. That one influences both the option market and the underlying market. And it's huge and it's beautiful because it doesn't go away. So it's there and it evolves from like a Vega position to a Gamma position, which means it goes from like a Vanna influence to a Charm influence and a Gamma influence. And it changes how the market responds to it. And you can see this in real time. And as that happens, like different cross asset headwinds or tailwinds interact with these hedging processes in ways that also are predictable. If you guys know my view already, because you're in the Discord or paying attention to what I'm saying in the mentorship, like part of my view or my hypothesis around what might happen next, because we're getting people that are asking questions about my view on the market now, has to do with us moving into frame. Like this position that was maybe longer dated volatility and not so much of a risk reversal position is becoming more and more, I guess right now we're kind of on top of it. It's just peak Gamma, peak Vega. I'm talking about the JP Morgan collar at 59.05 in June quarterly. But as we roll off of this expiration and into frame where this is going to become like a 30 to 45 day option, it's going to become more and more sensitive to the VIX. And as that happens, there's a lot of positioning in June and June quarterly that's similar to this, maybe not the exact same, but that stuff is going to come into frame in a way that's going to cause spot vol correlation to have moments of positivity, negativity, flipping, and instability in the end. And so when you map your understanding of this to the options chain too, and also maybe like what the VIX options chain suggests, you get real solid predictions. And so again, I want to be clear, the point of the mentorship is not to necessarily teach you guys how to copycat these trades. That's not the point. The point is to show you how they influence the market so that you can actually set up trades yourself or kind of calibrate your own trades to do better based on what they cause, right? So for example, here, I would never say, yeah, go do collar trades. It doesn't make sense. But if you can't figure out how to make money on a retracement from August lows, you need to be paying attention to this, right? It was point to point, very, very clean. If you're in the Discord and you're part of the subscription, I would encourage you guys to go back to the August archives. I think it was August 13th, maybe August 14th, but that entire OPEX week, it was crystal clear, right? If you remember, the VIX was kind of dropping back off of this spike, this sensational like spike to this fake print of 66 that never really happened, dropping back to levels that were like, stepping back down. And when it got to 20, it kind of hung there. And if you remember those couple of trading days, we had basically zero realized vol. And I remember very clearly, it was obvious looking at the profile, understanding how the market would calibrate and respond to this drop in RV, where the market would go from an index level and also a vol level. It just kept stepping up, almost like perfect lockstep. And if you remember where we went in SEP quarterly, it landed, I think, maybe 57.62 or thereabouts. Very, very clean. It's not like you can predict it exactly, but you don't need to. The fact that you can understand that this is going to move to a certain level and then it meets resistance. I hope you guys understand right now, if you're new to my feed and wondering why I think we're not going to just overshoot here, it's very similar. We ran up to a position that acts as both an anchor and a fulcrum, and we're right there right now. So as I'm looking at futures, when people are expecting us to overshoot the collar or quote unquote pop the collar, that's just not how it works. You actually need someone else to kind of pick up the baton and drive flow higher. When that doesn't happen, we kind of revert back to these big, massive positions where market makers are long risk, where they're long Vega, long Gamma, et cetera. And right now, what's interesting about the position is, yes, we're on a long Vega peak, and there is going to be some gravitation back towards that if we overshoot it, which we've already seen. Again, people are going to call it the headline. And of course, there's some truth to that. But the precision with which we find these levels has nothing to do with the headline. And so now the beauty is we're in this space where as we evolve into next week and the week after, it's going to be very important to see what happens with vol, because it looks like all the pressure's off, or I should say all the fear is gone. This idea that the VIX is a fear index, it looks like all the fear is gone, but it might not be anything like that. Instead, we might have seen something like a pinning, right? If the VIX were at a level where market makers were short put spreads or put ratios in some sense, where there were long downside options and short upside options, the same type of thing would happen that we see in the SPX all the time, but now it's in the vol complex. And so now it artificially puts pressure on volatility in a way that's not natural, not reflective of sentiment, but in a funny way, it actually tricks people to think that it is, and it becomes like a feedback loop. And so when you hear my predictions or whatever, this is kind of what I'm looking at. This is the lens I'm looking at. And this informs what I think might happen next, right? So my hypothesis kind of comes down to maybe we're stuck in an expiration pattern in VIX that is misleading. And if it is misleading, if my hypothesis is correct, when it reveals itself, for example, if we do unclench vol higher Wednesday, then what might happen next might cause a whole lot of paranoia, a whole lot of fear, and a whole lot of selling. But ironically, like there would be no reason for it, but the structural change, for lack of a better term, this lack of pressure or this pressure coming off, this artificial like hand pressing vol down. I think beach ball underwater is maybe a little bit exaggerated. Shouldn't pop that high. But there's no reason to think that VIX should naturally probe the mid-teens. Like, yes, we're going into summer, but we're not there yet. And there's still a lot of volatility behind us and a lot of unknown ahead of us. I think what we've seen right now is a little bit of a lull created by the positioning. And this is the kind of stuff that we look at in the mentorship. We touch on a surface level in the Discord calls, but it is much more advanced and requires a lot more time. And so if that's what you're looking for, then I would say that's what you want to be a part of, because that the group of people there is also very curious, very demanding, and very smart, sharp traders, whatever. There's a lot of great minds there figuring this out, and it's not rocket science. I let people stay as long as they want, effectively because I want them to get it. At the end of the day, it doesn't serve me to kind of like have people in and out. Like I want a community that understands this and is passionate about it. For me, this is as much of a hobby as it is anything else. But it's really, really important to go through this in depth and to have access to this stuff in depth. And then by the time you understand it, you start to see, once you can wrap your head around how these things create influences in the market, then it becomes really fun, right? When we talk about different trading structures, different reasons for one trade versus another, you could take the same market view and pair it against one market structure versus another. One strategy will work very well and work very poorly in another, even if it's quote unquote a bullish strategy, right? So I guess an example of this, like let's say you were looking at a short trade on April 2nd, right? So on April 2nd, I talked about this. I was like, I think this is kind of an overshoot top. It's kind of BS. I know we had some talk, there was like this, maybe it was an after hours Trump announcement about tariffs, very, very basic stuff, obviously. And my view is that vol was maybe a little bit suppressed on the downside. If we did give up that retracement, it was going to be violent, and not like a very, slow drift. So what do I want to do if I'm looking at that? Well, you want to find leverage, and you want to find something that is convex. And so the easy one, obviously, people go to gamma, and gamma's fine. I think actually the trades I took at the time were the April 3rd 56 hat puts and the May $48 puts, a 5 delta put. People are like, why would you buy a 5 delta put, or why would you do this? Well, the reason is very simple. Like I buy the gamma for the immediate move. That's the April 3rd put, and that paid off very well. And ironically, I thought the May put would pay off better right away, but it didn't. But on the second leg down, vol exploded. It started to explode. And what happens then is this 5 delta put that you bought starts to become different things on the way down, right? And so you went from something where you have a $10 option and very little exposure to the market, and very actual little exposure to implied vol itself, right? There's not a lot of vega in the 5 delta tail. But as you start going down, not only does it become closer and closer to the money just because of raw gamma, if the move is big enough, but it actually starts to knock in a different set of feedback loops. So when vol starts to go up, that's the point on the curve that's really robust. You get this thing that's more and more sensitive to vol. It gets more and more vega because of where it is in the distribution. And then by the time you start really moving and vol is caught up, or vol is kind of perked up a little bit and you start moving down, it becomes a different option. This 5 delta put is now a 20 delta put. So now you have more delta exposure, but you also have more spot vol correlation exposure. When you start going down at that level, it's no longer like the type of position that's going to spike, pick up a lot of vol or lose a lot of vol because you're moving straddles. Now it's going to it's going to gain or lose vega, exposure to implied vol, based on spot movement, right? And so spot's going down. It's still a heavy market. So it begins to knock in and gain vega exposure as the market's going down and vol's going up. So it's like this feedback loop that works in your favor if you're correct on your assumption that the market's not ready for a tail event. And it wasn't at that time. And you see, it doesn't happen all the time, but what I want to convey too, like if you're looking at that naively and you're looking at how to cheapen your exposure, it's very common to trade put flies. I do it all the time. If you're setting up for that move with a put fly, you're going to be very disappointed, right? Because we just sank like a knife through all of your inventory right away. And if you guys had structures like this, you looked at your P&L and wondered where did it go, right? You got your move, but by the time you even evaluated whether you wanted to be in the trade or not, you never made money on the delta because the vol spiked so much that you were effectively short vol the whole way down because of the middle of your fly just pricing too high. And then you just don't get to land it. It's hard to monetize. And there are other times too where it's actually a beautiful trade to have a put fly. For example, if you rewind to March 7th, March 14th, that range where we started probing those quote unquote double bottoms or whatever, those were great moments to have longer dated put flies or even like weekly put flies for a very good reason. Because you had a problem where market makers were subject to a Vanna influence pushing the market down, but then they had a profile in the near dated options that was actually longer gamma to the downside. And so it created this dual thing where all the trading of the vol surface was pushing the hedging pressure down, and with not a lot of realized volatility intraday. So positions that were set up correctly, a short tail position technically, because if you're long a put spread or long a put fly, you're kind of short downside convexity in some sense. You made more because the vol that you sold didn't realize. So you got to capture more of it. And then because you're starting off on higher vols, the spread is cheaper to begin with. So all this stuff is really what we drill in the mentorship. And what I don't always have a view. I don't try to force things, if you guys understand. I think 0-day profiles are great because there's so many repetitions there. There's so much you can do. And you never need to feel like you're sidelined because there's always another trade. But when I have longer dated views, I do share them, I do explain them. And that is kind of the whole point of the mentorship, to get your mind calibrated correctly to how things work so you're not surprised, really, for lack of a better term. So that's a lot to take in. If you guys are new, I'm sorry if it was kind of stop and start for a while. I didn't, it was kind of unplanned, kind of planned. There's one more question I think I wanted to answer. I think I put a tweet out before too. Oh, if you guys had listened to or like been looking for an answer to a tweet I put out, I'll satisfy this curiosity too. I mentioned that there was one news event in my entire career that I was totally shocked by. I'm gonna find the date. Let's see if it comes up. Okay, yeah, I had some really good guesses on the feed. There was one guy who got it right, but I think he kind of wasn't fair because I think I mentioned it to him before. What day was this? April 24th, 2013. You guys probably wouldn't even know this happened because it happened so quickly and was done so fast that if you weren't trading and weren't living through the experiences like the panic in the marketplace, you probably wouldn't even register it as news. But at the time, it was a lazy afternoon in April, and the Associated Press's Twitter was hacked. The account, which was obviously a well-followed news account, put out a tweet or a message that the White House was under attack. Here's what it said. It said, breaking, 2 explosions in the White House and Barack Obama is injured. I will never forget this because this was one of the only times in my career that it was so clear to me that like this was news that was not predicted. This was not, there was no leak, there was no nothing. It was complete chaos and pandemonium. It was like this quiet, it was almost what you'd expect to feel if like there was a nuclear bomb or like just war broke out somewhere where like it happens so fast, people don't even know, the news isn't even on it yet. And it's almost surreal. If you're a trader, you'll probably recognize this feeling. Some people brought up like the flash crash. If you guys remember the flash crash context, that was 2010. I think it was May 6th, 2010. And that was against a context of like literally Europe on fire. It was a debt crisis in Greece, and I'll never forget that day. It was a structural problem, not a headline issue. They blamed some dude in the UK, I think, which is preposterous. But the market just started disappearing. And it started disappearing against the backdrop of like every TV panel in the pit was like showing Athens burning. It was very surreal. But there was no headline to spark it. It was very surreal again in that sense that like something is wrong. But this April one was a headline. This was an actual tweet from a hacked account, a hacked respected account, that the White House was under siege. And vol moved so high, so fast on a downtick that if you didn't understand the problem with selling skew, like if you didn't understand your risk being short hedged skew, you understood it very well that day, because vol just exploded. And before you knew it, you were down, $10, $20 with a massive long delta position and had no clue what was going on or what to do about it. And then it all just erased. The AP put out something later that, or there was like, the tweet was deleted maybe, and they put out a statement. It happened so fast. I don't even remember what kind of actual market time we're talking about here, but that was the answer to the question about when we've seen the market move completely surprised. So that's all I got for now. If you guys have questions, just put them in the comments. I'll try to keep it cleaner next time. Obviously, we'll be a little more on point and on schedule. I'll do these more often, but tomorrow in the Discord, 8 a.m., we're going to do what was a TGIF call. We're going to call it TGIM because I like Mondays. I want to get started with this stuff. Like, I think starting the week off right is more important than finishing it. And so if you're new and want to understand the influences a little better, I'll give you a surface level intro of what they are, why it works, with like a presentation with some visuals. And that will be 8 a.m. Eastern to 9 a.m. And then we'll get right into the morning meeting like we usually do for the Discord. And then for the guys in the Discord subscription, we'll actually go through these one by one throughout the week, like, basically how to read positioning, how to read gamma, how to read charm, very basic surface level, but you'll understand it. And you'll get to see it in practice if you haven't seen it yet. So I'll put the link on Twitter. It's just, let's see here, discord.gg/VolSignals is a good way to get in. Otherwise, volsignals.com/VSPro would be where to get into the subscription. And morning meetings every day at 9 a.m. And tomorrow we'll start at 8 to go over the basics. So hope this is helpful for you guys. We'll do it more often for sure. And probably feel free to chat ideas at me, different topics that you want to see covered. Obviously, gamma and charm are hot topics and they're easy to talk about because they're so tradable on a daily basis. But if you want a surface level intro to anything, just, send it my way. All right. See you guys. Have a good night.